more information on fintech.devpost.com. And yeah, today we'll be focusing on data and privacy, possibly the role of DeFi there, and lots of interesting challenges that could unlock lots of potential in finance in general. We'll speak about lending and maybe other areas. So really excited to have you with us, JJ, and to partner with Scotia Bank for this. And as usual, we're having Katrina and Suhini to take us through this ideation session. So over to you.
Great. Thank you, Shireen.
Thank you.
Thanks. I'm going to put in the chat a link to Mural, which is the board that we're going to be working in today. So if you could just click on that, type in your name, and we're going to shift gears and move over there. And think about Mural. I'm not sure if some of you have used this before, but it's basically like a big virtual whiteboard where we can put sticky notes down all together, like if we were in the same room together, writing things down and talking and putting notes down. So that's primarily what we're going to use it for today. Great. I see some icons and animals popping up here. So we'll wait a couple more minutes. Because I only see a few people in.
We have about 11 people in this meeting, so I'm hoping to see all 11 icons pop up.
I'm seeing 5 people in, so we'll give everyone a couple more.
For some reason, I'm getting an error when because I'm from my mobile phone and my iPhone actually, and I'm just getting an error in Safari that it's not a valid link for some reason. I'm just trying to understand what's going on.
I think you may need to use the Mural app on your phone. I haven't tried accessing on Safari that way, but I have used the app.
Okay, I'll try that.
But I'll also send the link just one more time in case that one is not working for some reason. Okay, I think we have 8 people in. So why don't we get started just in the interest of time. So yes, again, Mural is this big virtual whiteboard, and mostly what we're going to be doing today is adding sticky notes to the board. So adding a sticky note is basically adding your thought about this, or you know, a comment of what you want to write. So all you need to do to add a sticky note is double click, and the sticky note will pop up, and then you can start typing in it. So if everyone could try that here in this section. So we're expert sticky note writers. You can change the color of your sticky note. You can change the size, the font. Great. Awesome. And then the other thing we're going to be doing, which will help you with by kind of bringing you to a section of a board and summoning you, like how I did to get to this section, but just to navigate across the board. So if you hold down your space bar, you'll see that your mouse turns into a little hand, and that'll be able to allow you to move around the board very easily. So just hold down the space bar and move around if you want to try that for a couple seconds. And really, that's how we're going to be using Mural today. And before we jump into our topic and pass it over to JJ to introduce what we're going to be doing, we wanted to get you all awake if you're in that time zone of morning, or if you just had a big lunch and you're falling asleep. So to wake you up, we wanted to do a quick little poll since our topic is around DeFi, blockchain, crypto, lending. If you were holding crypto, would you collateralize these assets to borrow money? So we're going to do a little bit of a poll here, and I'm going to start a voting session. And what we will do is you'll just vote on one of the sticky notes in this section. And I will start the voting now. Okay, we have one more person that we're waiting to vote on, and then we'll close the voting session.
Yeah, sorry, but don't wait for me because apparently on the app, I don't see this voting process.
Oh, I'm sorry. We'll end the voting session, but we can discuss what you would.
It's a yes.
It's a yes, okay. So let's end the session. All right, then everyone voted yes.
Yes.
Can someone here, do you want to say why you would do this? Or if you had any reservations when you made the decision?
Actually, I would say that I'm working to make a no possible, but yeah, but otherwise, probably yes.
There's a lot of strategies. I don't know if you're long or short. A asset is a way to long it or short it without create taxable events, or is a way not to expose yourself to derivatives and, I don't know, open a short position, open a long position, or if you wanna just insure yourself, you know, like you want the 20% API of UST, but you don't want to be exposed to the peg risk of UST. You just lend your USDT or your centralized CBCD of your choice, and you borrow USDT to, well, at a 80% rate, let's say, and then you put your UST borrowed in Anchor to get your yield, and if UST don't depeg, you have your yield. If UST, in the case of UST depeg, well, you got your USDT as collateral, so you give back your depegged UST and you take back your collateral. So there's a lot of strategies implying collateralize your assets and take a loan, basically.
Mm-hmm.
I like to think of it as would someone that is not deep into crypto be willing to do this? Because there's a lot of people that are casual cryptocurrency holders, and I believe they probably would be willing. The question is how and what are the risks?
Well, you could make it easy, like a strategy app. You just put your, let's say, Bitcoin there, kind of like hodling Bitcoin, and the app is doing strategies in the backend. You know, it's like you're offering a X% yield on your Bitcoin, on your Ether, on your whatever you want, and the app is doing some strategies in the backend that could imply the collateralization of the assets and the borrowing of others, maybe, no? For a average Joe.
Actually, it's could be possible through some kind of custody that you borrow without really knowing these DeFi mechanics behind the scenes. I don't know if I was answering exactly what JJ was asking.
Yeah, essentially abstracting away complexity, right?
Yeah, exactly. Because even managing your own keys and stuff. I mean, obviously, very important for the non-custodial node, but actually, there are some already existing solutions to indeed, abstract this complexity. And yeah.
Yeah, thank you to you both.
And there's also a link to the previous discussion, because what Société Générale is doing, they are actually not willing to give their, practically their collateral to MakerDAO, and they're just, let's say, giving a pledge on their collateral, and they want actually to implement that as a smart contract or security token to do that. But yeah, it's an institutional use case, not really for everyone.
Yeah, well, I think this is a great discussion to kick off everything. Hopefully, JJ, and dive deep into what we're going to do today. So I think let's pause that for now here, and let's just kind of go over what we're going to do today, and then we'll pass it over to you, JJ, to introduce the problem space, how you got to this, what really we want to think about within this big world of DeFi and lending and data privacy. So before I pass it to you, just to give everyone an idea of what we're going to do, we're going to learn a little bit more about the problem statement, where we want to work today, and what we're going to do. And then we're going to move into a couple personas and think about how they feel, take on those personas and be them for a couple minutes, how they are feeling, what they're thinking about this space, and then we'll do some rapid ideation to figure out what we could create and what a bank could provide to help within this space. So with that, I'm going to pass it over to JJ to introduce our problem statement.
Okay, thank you, and thanks everyone for being here. So I'm approaching this and a little bit of background of where is this coming from in a personal sense. I've been trying to find ways to think about how to solve accessibility in finance. And I got to a few statistics that provide the Bank of International Settlements, and where they say that 42% of the population has no way to access emergency funds. If anything happens, 4 out of 10 people have no means to financially react to that. But 1 out of 10 people have borrowed money from the financial system. So you have 3 out of 10 that would require borrowing from the financial system. And they cannot, they haven't done so, and probably they don't have access. And then we have the traditional financial system, but we have a nascent ecosystem with DeFi. And the question is, can we meet the demands of the underserved population that have no access? And sometimes having no access means that you have low income, or you don't have the means to connect or meet the requirements from the financial system. For example, providing collateral in the traditional way to approve a loan is you're going to apply, and after KYC, you're going to be assessed on your creditworthiness. And many times that requires knowing your income and having some predictability on your income, but also being able to provide some collateral, being able to provide some collateral so that you reduce the possible loss, the expected loss of that loan. And that's a usual requirement. That's the way finance works. And the question is, there are a few ideas here. The first one is, how can we improve access? Is there a way to reduce the requirements? And usually the credit assessment, the credit worthiness, is based on very specific data, structured data, that's been widening, and alternative data has been gaining importance, but still the majority of the financial system is being based on things like basic predictors of income. For example, do you have a salary? Are you able to provide evidence of that salary? So if you're a gig economy worker, you might be credit worthy, but demonstrating that is going to be difficult. And also, for example, if you have non-usual forms of collateral, cryptocurrency being one of them, that's not going to be eligible for the main financial system. So essentially, the question is, how can we get to these 3 out of 10 people that might need money, but we don't have the means to do it, to provide that through the usual financial system? And data comes here in a very important way, because the alternative data, that is the other part of the innovation here, is gathering more and more data. And you see things like super apps that are gaining in scope, and they have more and more data. And having more data, they're able to know you better and are able to provide better credit assessment, providing better rates, better pricing for you. But the challenge now is, how much data should someone hoard? How much data you should be providing to one or many parties, and what's the control that you have on the data? So that's essentially the space I'm thinking about, providing access while controlling or taking care of your data. The way we are framing it, I believe I should go through this, is how might we broaden access to lending for the underserved banking customers while also guarding their privacy and protecting their data ownership. So this means bridging the gap between a very advanced and always changing crypto ecosystem and DeFi ecosystem with the people that are not connected to it, but that could benefit from it.
Thank you for that introduction. And JJ, I'm going to do the usual where I start asking some questions. So the first thing that is popping to my mind is this particular category that we're talking about, right? They're underserved. In the very essence, these underserved people, their needs are, I would imagine, more about how do I get access to this cash that I might need from a lending perspective, and less potentially about how much of a data trade-off is happening in the process of accessing it. So is it something front and center in the minds of these people? Or is it more a question from the bank's perspective, where you want to act as gatekeepers and protectors of that data vision, that Web3 potentially needs to care about? But from the lens of the personas themselves, is it really an issue yet? Or are we just thinking?
Yeah, I believe we have maybe two groups, general groups in this population. One of them is low-income individuals that if they have an emergency funding need, they will be willing to provide data. Probably that's not going what's stopping them. They need the funds, they need the money, So probably they're not going to stop there. There is another group which has access to the financial system, but they're not necessarily satisfied with what they're getting. Probably there are freelancers, or I have friends and family that are in the creative industries, and they many times, given their unpredictability of income, get bad rates, and many of them are also privacy sensitive. They are, I believe it started with Cambridge Analytica probably, and all that followed. There has been a higher awareness in terms of owning your data, and the ways you can serve that more higher income but not well served population is having more data on them. Traditionally, is having more data on them to provide better products and services, better rates. But that goes against a need, a desire to have better privacy, and better privacy is probably changing preferences in terms of the mobile phone you buy, or the laptop you buy, or the institutions you interact with.
Okay. So we're talking about awareness. So let's now jump into the persona itself, because I think it starts to become more concrete, because right now we're still talking abstract. So this is Maya, the first persona that we have here, which has been provided by yourself. So there were a few things that, were interesting for us, that it didn't all come together in our heads immediately. So if we go through the description of Maya, and Katrina, please feel free to jump in. We were very interested that she's a freelance visual designer. She wants to buy her first mountain bike. She also works as a trainer at the local gym, right? And what she wants to do is she wants to get a loan to buy the bike with a financial institution that values her discipline and way of living. That's very millennial of her. And she would like to use her gym assistance and payment data, as well as her last freelance projects, to support her loan application. Equally, she also wants to have control on the usage and sharing of her data, given that she's worried it might be employed for advertising or insurance policy pricing down the line. Now, the first thing that we were wondering is, why does Maya really care about her data, the way it's been phrased here, right? And then we said, oh, but she is going to buy a mountain bike for which she may need insurance. And it may be that the insurance company makes a judgment call because mountain biking is considered an extreme sport or something. And therefore, that is what she's trying to protect. Is that right?
Yeah, she's trying to protect herself by protecting her data. Something interesting is, I believe it's not something that's equally in all geographies and in all jurisdictions. Something that happens, for example, in Latin America, where I come from, is that there are very lax regulations in terms of data privacy. So, for example, once you provide your contact data, even before going into the risk data, when you share your contact data, you probably are going to be spammed by unknown companies for the foreseeable future once you share your data. There are situations, for example, when you share you have a new mobile phone, and that mobile phone is already being spammed, and you have not shared that yet. So there is that creates a day-to-day need to protect your data. But there's also other ways of or kinds of risk. I going a bit to not only specifically to Maya, but going into data. 1 out of 10 people feels comfortable sharing their income, and that's the same with the phone number. So it's not that people feel comfortable sharing their data, is that they do so to get some reward. And in the case of Maya, maybe the threshold, the reward threshold that she's expecting is higher than other people, right? So in her case, she's more privacy aware, but probably she would be willing for a good enough rate, or maybe for a certain relationship with the company, with the brand.
I see where you're coming from. Now, I couldn't relate to this problem personally because I live in the UK. And as you may know, until Brexit happened, we were all covered by the GDPR. And therefore, we don't have these kinds of problems because the way data is used is quite restrictive from a regulatory perspective, which I guess is not the case in South America, right? And that's why this is happening. So what you're suggesting is, therefore, the financial institutions has a duty of care to its customers to act more responsibly in the way that you're actually sharing information with other parties. Is that how you're suggesting we should look at this problem?
I will look at it in a different way. If you want to provide the best rates, the best service to Maya, you will need a lot of data from Maya. the situation is that kind of data is not available in a single place. So you would need the ideal situation from a credit risk perspective and a financial offering perspective is knowing everything about Maya. The more you know, the better credit risk decision you will be able to make. You will be more effective. Your predictability is going to be better. So as a financial institution, you are able to offer better pricing because you can predict. But the problem is, knowing all about Maya is a huge privacy problem for Maya and for the holder of the data as well, for the company as well. So the question is, how can Maya share out of all her information, own her data, so that she can use the data selectively to get the same benefits as if she were sharing everything about herself, but without doing so.
Okay, so the question that we should be asking then is, what might we give Maya in return for access to all this data that might be exciting for her? Because we've already kind of addressed what happens when Maya goes to the bank, kind of, but is it worth going, spending a minute just thinking about that? And then we can ask the question, what should we give Maya in exchange for the data that we're asking her for? What do you think?
That's approaching from the reward perspective, but the other approach would be how can we limit the access to data but still do a meaningful credit risk assessment? And a way to do so is you can constrain the amount of data that you're sharing, not to share everything, but segment the data. But there are also ways not to share the data itself. But usually the data go to the credit risk assessor. What if you do make the credit risk assessment go to the data? Radoy, ¿me recomienda?
Collaterals.
Yeah, so no, sorry. I just wanted to ask a question. It was not to give answers. I hope that we are not at the stage to just give answers. But I was just kind of inclined to reframe your question. Why actually we should talk about sharing data at all? I mean, sharing data means like the current open banking paradigm is that you practically provide to a third party your details from your bank or let's say in fintech. However, the question is, why do we need to think in this paradigm and not in a very feasible paradigm now, technically speaking, which is to have this, again, I'm hinting the fact that I'm working in this field of self-sovereign identity, but it's personal data storage paradigm where practically you are the sovereign over your data, and this data is then presented selectively. Selective disclosure is the official term, as per the needs of any third party. For example, a lender who would give you the loan based on a number of different data entities. So I'm not pushing in this direction to give the answer to your question. Is more a question of reframing it or putting another frame to this discussion, which is not providing data to be, kept by someone, but providing, keeping your data on your own, and then, of course, providing it, and obviously potentially in a very anonymous way for the needs of a credit scoring process. So this is called also zero knowledge proofs, that, for example, you prove that you are an eligible, borrower, but without disclosing the data.
Yeah, I agree entirely with that. And maybe the way we might phrase it is, how might we perform effective credit assessment, minimizing data sharing? And that might include no sharing data at all, like zero knowledge proofs, or homomorphic encryption and other techniques that are emerging, or sharing selectively,
Right.
All right, let's actually go through the exercise and see what comes out of this. So the question that we want to ask is from the lens of Maya, her experience of what she goes through when she wants access to credit, right? So let's do this step by step collectively. So I think we have about 6 or 7 people on the Mural board. So if you can do a quick, maybe 2-minute ideation on what the steps are we think that happens. And when you're thinking about it, think about what her need is, what she goes to the bank, what the bank asks her for, what does she give in return, and what happens afterwards, right? So at least 4 steps that we think Maya goes through when she goes to the bank.
Yeah, perfect. I'm going to set a timer for 2 minutes. We can always add more time. So let's start and think about that.
And for those who are not on the Mural board, just think about it. And when we've finished typing it out, we can discuss it. And then you can participate in the discussion as well.
Or feel free to even put it in the chat, and I'm happy to put it on a sticky note. I'm going to add another minute, Sahini.
Yes, please. Thank you. And remember, we're talking in this story, she wants a loan for a mountain bike, and let's assume the cost of the mountain bike is $1,500 USD. So if that's the amount that she's looking for, does she really need collateral for it?
No, she won't probably.
Bit of a long form, yeah.
That's time. So why don't we put down our last couple thoughts and then start talking about what we see here. Does anything jump out to anyone about what they see in this section?
It's interesting. Someone put here what asks for a salary slip, but she doesn't have one. And what does the bank do then? That's an interesting question. I believe there are two scenarios
I wrote it
for that.
Yeah.
Yeah, someone
Yeah,
wrote
want to comment?
Yeah.
and I asked the question, what does
Yeah. Just well, basically I thought that she needs to prove somehow, because you said that she's like freelance, right? So she doesn't have a salary slip.
Exactly, and it's a great point. So yeah,
So
I'm over to
she
Jay.
needs to prove the income, probably extract from a freelancer platform some statement or something.
So what happens, JJ, with a bank when there is no salary or, the regular proof? Do you say no to such a customer?
It depends. It depends. This is a low amount loan, so probably it's going to be a yes anyway. Depending on the other information you might have from credit bureaus and other sources, possibly would be a yes with a very high rate because of the risk. It might be a no for some population if you have less visibility, if they're unbanked, for example. Depending the policies of the financial institution, it may be a no.
Right. So is it possible then, if in the absence of a salary slip, you ask for her bank statement to look at income, expenditure, etc., and make an assessment based on that? Alternative ways of understanding affordability to pay back?
Many times no, because this is a low amount loan, so the cost of processing is going to be very significant compared to the loan amount.
Okay.
So it's going to be a very rigid process, which is going to go through certain data. It might be different for different institutions, but if you for some reason are not meeting the specific data, you probably are going to get a no.
So it sounds like in this entire process that given the amount and given her profile, the likelihood of her getting access to funding is fair, is not high, but is fair. And she may not have to look for alternative forms of financing for that bike, right?
Yeah.
And from the bank's perspective, this may be a category that you're able to cater to, despite the fact that this is underserved as a category, because they're still coming to you for the lending product and not going to the alternative, fintechs, for example, to seek this out.
The fact is that she will have really horrible taxes, really horrible interest
rates.
Yeah.
Exactly. So if we play out a scenario where, she gets an offer from the bank and they say, we're going to give you X%. Here's the money, but this is your interest rate. And Maya does not like it. Right? She says that's ridiculous. I'm almost going to pay you twice the amount of the actual bike. And then she says, all right, I'll think about it. And she goes home to think about it. So what happens then? Like, is there something that she does to look for alternative forms? So what is that alternative form? And this actually goes directly into the board. So do you think, Katrina, it's a good segue into the first section of the board and can start drilling down there?
Yeah, I think that's perfect. I'm going to bring everyone to our next section here. So exactly what Sahini just said, right? She sees that it's a really high rate. She's not that excited about it. what are the alternative solutions that she could go look at or look for or go to that would help cater her for a better loan with a lower interest rate, and maybe also she wouldn't need to provide as much data. So why don't we do a fast ideation here for about 2 minutes and start thinking about that, what these alternative solutions are.
Well, if she have like a $3,000 worth of Bitcoin or ETH that she does not want to get rid of, like collateralized, and get a loan.
Sorry, just giving you the background on Maya. On this persona, she doesn't hold crypto. We have another story of another persona who does, but she doesn't.
Mm-hmm. Right now.
Yeah.
So buy 3,000 euro worth of crypto collateralized.
Save and wait. I love that.
You know, that's what many people would do. It's not an immediate need in this case, though.
But then let's assume that she's very impatient to go mountain biking and she doesn't want to wait. Then what alternative solutions come to mind then?
Rent a mountain bike.
Rent a mountain, yeah. I love some of the responses coming in.
I'm going to add another minute to the timer. Hopefully we can get some more people putting down some sticky notes here. Some new to this section if you're having trouble finding where we are.
So someone talked about her having, a certain number of crypto assets and then going in that direction for a loan. But is it possible for someone like Maya, who doesn't have any crypto assets, to still go into the DeFi space to get some loans?
As of today, there's no under collateralized loans because no DeFi KFCs. So no DeFi loan points. I don't know, in Italy and in Spain, we don't have like a credit score. So is different. Well, they assess you they evaluate your incomes, but you don't have a credit score like in USA. But anyway, no under collateralized loan in DeFi still. Mars protocol is what's like the closest, but is for protocols, not for peoples.
Just share a link, have a look at it. Tell me what you think. And here's another one. The previous link as well. Yeah, thank you, Katrina.
Yeah, there's a lot of research on KFC DeFi, but those are still landing page. There's nothing working, no? As of today.
In terms of volume, the huge majority of DeFi loans are collateralized and over collateralized indeed. So yeah, it's nascent industry, and I believe it's a very important part of the opportunity here.
Right, and this leads us to the further into the discussion. So there is an opportunity, it has been identified. There are some early players that are sort of inching towards occupying that space. But in the absence of that, what does someone like Maya do? So let's look at some of the answers here. Look for offerings from smaller near financial institutions. Yes, some neobanks that might be doing something different about alternative credit scoring or even giving better rates because they have a clearer picture, as we were saying. Check for finance from sports retailers. Huh, interesting. Whoever has written that, could you expand on that a bit?
I mentioned that one, and
Yeah.
if the company is offering some finance, and this is connecting more to the embedded finance from the space, that is what if they can provide it, and maybe the sports retailers are more connected to the needs and segments and characteristics of people that need finance for the bikes. So it might be a better match in this case.
Right. Okay. Friends and family, crowdfunding party. Wow. I should try that once. Never done it. C DeFi provider against crypto collateral. We're not sure if she has any, but maybe now that she knows that works, she will try it in future. DeFi loan without collateral is emerging. Payday loan, which is highly risky, very high interest rate. I'm not sure it serves the purpose because the bank already is giving her a high interest rate loan, but maybe for a longer period of time, right? The payback time might be longer. Right. So at the moment, the alternatives in the market, not really.
Credit card. I believe she has one.
Credit card, yeah.
Right. All right.
Well,
shall we jump into the next one?
Yeah, looking at this, right, we're seeing, buy now, pay later. Thinking about what you were saying before at those retailers, maybe they have a financing option. But here, I guess we're seeing, right, the theme that I'm seeing here is maybe if she has crypto, she could do something alternative, but there's not many options that the bank can provide her. So with that, moving to our next section here, we are looking at what would a bank solution need to have to provide her a lending option that's better than the alternatives and also maybe better than what the bank currently is giving her, something better than this high interest rate that she would be getting right now. So I'm going to set the timer for 2 minutes. I'll do 3 minutes, and let's start to think about what the bank could provide that would be better than the alternatives or better than what they're currently providing right now. All right, we'll let everyone put down a couple last thoughts. And as we do that, let's look and see what others have put in this section. Seeing a lot of ideas about data, which of course we're seeing getting access to more data, alternative scoring, and then some risk segment, specific risk assessment, reduced risk of holding data, segment specific app. Whoever put that down, do they want to speak about that?
All right, so I did, but it's overlapping probably a little bit with the risk process or risk, what was that? Yeah, that was risk assessment. But my idea was that basically, I think there could be a way also to position on the market something that is specific to a type of segment like freelancers, yeah, freelancer specific app, which would not be only just the risk assessment, but also a kind of offering that is tailored towards this group of customers, which are more and more the gig workers, that kind of customer base. And so they will probably enable them to more easily go through not only just the loan application and then risk assessment. So there will be some kind of specific, yeah, UX. I don't know, the interface to do this kind of stuff. It's not just the internals, but also the digital experience of the customer.
Yeah, I think that's a really interesting point because we're hearing more and more about more alternative like forms of employment, right? It's changed in the last 30, 40, 50 years where you're seeing more and more like types of consultants, or this gig worker environment I think is booming bigger. So to like fit that segment is a really interesting point. A really great idea. Let's see, we have easier and less expensive way to process her data for creditworthiness, and less expensive way. So it's less expensive for the bank or less expensive for the customer?
So going back to the original story, we talked about the mountain bike being $1,500 worth, and then JJ pointed out that it's not really worth going through the entire processing of, understanding exactly her worthiness, because the cost of that may be higher than the amount that she's asking for. The amount of low value amounts, what is a better way to do data processing from the bank's perspective so they can cater to this segment who wants something that is low value or low ticket?
Yep, great point.
I'd like to connect that to the specific risk segment, a specific risk assessment, instead of saying, oh, this specific loan has this data and we are respecting these other data, saying, okay, there is this segment of the population I'd like to serve. What are the characteristics? And maybe I design something for them.
Right.
And it's something that is happening more and more, having segment-specific bank offerings and even institutions.
Yep. So if I was to draw a parallel, so the Klarnas of the world, that's exactly what they do. If the amount is small, if it's below a certain amount, they don't do a credit check. They just take the risk on them, and they create this deferred payment model to facilitate that kind of transaction, which is something that she may have access to already from an e-commerce portal, right? So the question is, does the bank want in on that segment? As someone has said, I think, Radoy, I think you're the one who said the segment-specific app. So that would directly compete with the share of wallet of Maya with the likes of Klarna. But in all of this, I think we're still not talking about, from Maya's perspective, her hesitancy in sharing data.
Mhm.
Right.
And I think leading to that question, maybe we want to move to our next section. So you need to think about her hesitation in sharing the data and focus rather than now that we just thought about, what the bank solution needs to do to provide her lending, so provide her the cash that she needs. What does the bank solution need to provide that privacy aspect that she's very concerned about? So in this next section, that we're looking at here, let's try and think about that aspect. I'm going to set the timer for 2 minutes, and let's start thinking about what the data component, that security, that privacy component needs to have. I'm going to extend for another minute since I see a lot of typing still, which is great. So keep on typing. All right, that's time. So why don't we finish up our thoughts and then start to review what other people have put in this section.
Hello, can you just give an idea of what this question really means? Because I don't understand what was the meaning of this question and what were we supposed to answer?
We were looking at what the bank's solution to help Maya, because Maya needs this loan for her mountain bike that she wants. So we're trying to, but she's concerned about the data that she's providing to the bank. So we wanted to understand what the bank would need to provide her so she feels like her data is very secure and she feels okay with sharing this data.
Just because she's a freelancer, are you saying because of that?
No, it's because she's concerned about her data being shared. So yes, she's a freelancer, but this is specifically because she's concerned about her data privacy.
In sharing it with the bank or other platforms if she does not get her money from the bank?
Sharing with the bank.
Zainab, I think you may have missed some parts in the beginning.
Yeah, I got disconnected.
Right. So the context behind this is in some markets where there is not clear GDPR-like regulation, when someone shares private information about themselves, like their telephone number, their address, etc., with the bank, sometimes they start getting spam messages from third parties who somehow have access to her personal data. And therefore, in such markets, the bank needs to take extra precaution or do something to assure that the data that they're collecting from the customer is indeed safe and secure and will not be shared. Is that fair, JJ? Did I cover the problem?
Yeah, and I'll add a little bit of color. Not necessarily when you share with the bank is you're going to get from a different institution, but probably you're going to get a spam from the bank itself. And maybe in several countries there is no regulation on the specific use on your data. If you provide it, then you allow its use, you're going to get all the communications that are possible.
Right.
That's an example. There might be
Yeah.
All right, thank you so much.
So going back to what we had put in this section, I think we have some really interesting thoughts that people have put down. Is there anything that's jumping out to anyone that they want to discuss and talk about?
I'll jump in. I believe there are the more traditional and the more innovative kind of solutions. In the more innovative front, probably is the idea that instead of you having the data coming into the bank and running the risk assessment or the risk algorithms models on that data inside of the bank, you could bring the algorithms or part of them to an ecosystem. It might be a blockchain or other ecosystem, and run algorithms on that data, and maybe get some signals coming from those algorithms into the bank without having the data with yourself. That's also very helpful for the bank in the sense of the bank is not going to hold that much data, which reduces liability in terms of GDPR in a more regulated jurisdiction. But in this case, it would reduce the exposure for Maya, because Maya is not sharing the data with the bank, and it's providing a secure space, cryptographically secure space where she is putting her data.
Mm.
JJ, what would be the kind of, is there any hurdles for a bank? What are actually the hurdles for a bank to adopt this? Is it like just a technology maturity, or is it some regulation as well?
I believe it's a maturity. It's a maturity of the technology, the ecosystem, and probably the maturity is connected to the capacity to show to regulators that the whole thing is sound in terms of both data privacy and risk assessment as well.
And thanks for that comment, but also probably kind of internal compliance understanding. And before going to the regulator, I guess there will be also an internal friction, or let's say resistance to change or some kind.
Of course, I believe it's an ecosystem that it's maturing. I was referring, for example, to a network called the Secret Network. And this is a network, a privacy first network where you can run algorithms, smart contracts on private data by default. And given that it's a nascent ecosystem, obviously that the understanding is not there yet for almost anyone, so it's maturity at all levels, and also to the technology to prove itself as well.
And it's IBC compatible, has a lot of cool stuff, secret network first, DeFi on that is not really public access into the transactions. The fact is that is not really secret because the secret is hardware based, basically. So if you're an hacker and you really want to know something, you can know that's something you want to know.
Actually, to that point, something that I wanted to talk about here, I was seeing some thoughts around like key access, like using SSO or keys to access these different datas on third-party portals, or this idea of leveraging a blockchain. Was kind of what I was thinking here when we were talking about transparency. JJ, to that regard, right? We were doing some research and saw that there's kind of this battle between transparency, but also being secure and being private still. So would the Mayas of the world feel safe knowing that maybe her data, if in this world that we're thinking about, if her data was on a blockchain and that's how the bank was accessing it, and she could provide whatever certain part of the data she wanted she wanted to share with people, would she be concerned though about that aspect of it being public, the nature of that and the transparency of it?
Yeah, I believe that's a very important topic, because with self-sovereignty, it's the idea that you control the data. But even if you, in practical terms, you control it, you might not have the feeling that you control it, because if it's published in a public blockchain, even if that's cryptographically secure, I believe that many people wouldn't feel that they are being that they're understanding or that they're safe just because someone said, oh, it's cryptographically secure. That sounds that you're just confusing me, possibly. And the data it's up there just for grabs, So yeah, I believe that might be an important concern. And in this case, we are more in a millennial population with Maya, so probably it's going to be more willingness to understand this kind of ecosystems, but it's going to be a hurdle for adoption.
Mm-hmm. I think we have a question. Go ahead.
Yeah, a comment from my side is this is a domain that I'm working in, and just to want to clarify that self-sovereign identity does not mean at all storing data on chain. Storing any personal data on chain would be, first of all, GDPR, because it's not reversible, right? So you cannot delete your data. So even encrypted. So therefore, because encryption, over time we're talking now about quantum computing and beating encryption and so on. So this cannot be changed once encrypted and put on chain. Then 20 years later, someone can decrypt it, and basically all your data goes open. So no personal data must be put on chain. And the concept of self-sovereign is not to put data on chain, but to put it off chain in a store which is under the control of the holder, of the subject, actually, in a certain way that, of course, requires maturity. Now it's quite an active research topic. So there's nothing, fully UX great from UX perspective, but there's a lot of work that is being done to make it even better. And then really the customers, of course, it requires awareness, right? This is new technology, as every new technology requires adoption through awareness, through promoting its benefits, because it has great benefits. In EU, for example, there's even European Union level discussions and working groups that are actually talking about the self-sovereign identity for the European identity document. Just as one example, it's not the only example. But if this happens, actually, then we'll open the door for many use cases.
I have a question at a very philosophical level at this point, which is when we have players like the big tech who basically trade in liquid gold, which is data, right? The Facebooks of the world, they know everything. They're collecting data in and out over years for profiles like Maya. And at the same time, we have Maya saying, I'm concerned about my data, when it's easily being almost gifted to the big techs. So therein lies a very logic gap in my mind. And therefore, when we talk about self-sovereignty of data and equally big techs doing what they're doing, how does it all add up? I mean, where is the world going to go to? Because the two can't coexist together.
That's a great point, actually. That's why there are a lot of also research topics and developments right now on decentralized social networks, where practically the data shared is in this context not really shared, not really stored by any single authority that is controlling them, but it's
Right.
shared again selectively based on the interactions that you have on this social network. I'm not talking about the pure pseudonymity here, but I'm talking about even about different types of data that you share and the storage of data that remains private. Of course, that that would take time, but there's a lot of big names that are working on this.
Interesting.
I
believe that.
Yeah. Anyway.
Sorry.
Yeah, no. I was just saying that even Twitter, but now I don't know if it's Twitter, but it's more open source, like a project that's called Blue Sky that's exactly tackling this.
I was going to comment on that, touching on a survey that Google did with VCG, where they found that 1 out of 2 people are not comfortable sharing their data, and if that's connected in any way to add personalization, but probably more than half are doing so. So it's an interesting thing where you get the stated preference and the effective preference is different, and they're doing things that they're not comfortable with, but they're doing it. And there's an important question to understand whether it's just that they don't have good enough alternatives, and if they did, they would be willing to switch, or if it's just something that they think, but they are not going to act on it, and actually it's not going to change behavior, and that's a key question.
And the other thing that I want to point out, so when I was in China, which was maybe 3 years ago, I noticed that the behavior that the Chinese population had was so different from the West, in that they were very comfortable with the trade-off between their data ownership and convenience, right? So they were basically on this WeChat platform doing everything, starting from chatting about their personal lives to doing e-commerce, to doing banking, to ordering cabs, etc. So everything about their lives is obviously being collected, and they're comfortable with the government knowing everything about their own movements, etc. But in return, they have very convenient life being served from their big techs, right? So that's the world they're moving in, and it's a very high-tech world. And here, the rest of the world, we're still having these conversations about what is right and what is wrong. Where do you think we should be seeing ourselves in the future based on this? And this is an open question. I mean, we have a lot of subject matter experts here. So where do you think we're going?
Well, it's the different worlds, right? It's not one world. That's the issue. So yeah, there are some different philosophies and different mindsets, and I think that China is a good example for more like centralization, and unfortunately, it's not aligned with my personal values. This kind of topic, and I think there's a lot of, at least in the Western part of the world, a lot of kind of freedom. Let's call it maximalism of kind that is more working towards this what I'm describing as self-sovereign identity, but it doesn't mean to be maximalist in the use cases. Yeah, but I don't think that let's say the world will adopt one single approach. Not yet, not this stage, I think.
Interesting.
I believe that the niche of privacy conscious people is going to keep growing. It's not necessarily to be the majority of the population, but for example, I personally am a privacy conscious person, and my search engine of choice is a privacy first search engine, and you see the graph, the statistics and the growth of this kind of ecosystem, search engines and others, and they are exponential. They've been growing exponentially in the past decade. So you see that this is something that there's appetite for, and it's going to be a growing niche where you might find a business opportunity. So probably it's not going to be the majority of the population, but there is, and it's interesting that this is many times or frequently younger population that is more digitally versed and privacy aware. But also something interesting is that the more privacy sensitive people per Google's survey is the wealthier, older population. That is a completely separate demographic. That is not very versed on newer search engines or stuff that is taking care of their privacy. They're just putting some distance with the digital ecosystem because they are afraid, because they have a lot of wealth and capital that they want to protect, and they are afraid of that ecosystems and the
Yeah, and
threats.
JJ, one question that I have on that, you were saying, and I think one thing that we've been talking about, a theme that's occurring too, is that this is only a certain section of people, right? We were kind of classifying, maybe there's like two groups. There's this millennial group that understands, computers maybe more than their parents do, and like understand that data privacy aspect. And then there's this older generation that, high net worth, high wealth, they don't want to have that data out there. How do you think that for, Web3, we've talked about it a little bit or thrown the term around, it's an interesting concept, right? That we're moving towards Web 3.0. What is that going to be? Everyone is participating in Web 3.0? Is there still a Web 2.0 going on that people are being participating about? Maybe we can talk about that too.
Yeah, that's interesting. I believe that Web3 has the potential to grow even for the non-privacy conscious population. I believe it's also going to be about the value propositions. And also, I believe the social behavior. Many times, the reason you jump into a bandwagon is because you see other people doing so. And you see NFT, which is a complex topic, and it's not necessarily technically sound in many cases, but there is social behavior, social proof, and social value that an essential thing of the economy and even the money, even concept of money is that the value is in the social behavior and the value other people put into this thing. So I believe that once more people start to understand and place some value into the Web3 ecosystems and assets, it's going to grow naturally just as a social phenomenon, not necessarily connected to privacy, but there might be also a subgrouping into the wider Web3 engaged population that is going to be privacy aware, privacy sensitive, and for which some a specific solution might make sense.
And in the chat, we had Valentine make a comment that's really interesting and also goes with this Web 3.0 idea. She was saying that there's an option where users can be fairly rewarded for sharing own data, which is not happening at big tech at the moment, which is a really interesting idea, Valentine, right? This being rewarded for sharing your own data. My limited understanding of Web 3.0 is that's a big feature of it, being rewarded or being able to own. Does anyone want to talk about that? Or JJ, do you have some thoughts on that?
Okay, yeah. I believe that there is, once you have a network, an internet of value, in a sense, moving value is going to be very, very easy. And it already is for a specific set of use cases and for a specific niche of the population. And of course, monetizing stuff and being rewarded is going to be normal. Something that it's even I believe it's compound the network that is providing in terms of DeFi loans, going back to the DeFi loan space specifically, where when you borrow money, you are being rewarded. You're rewarded for borrowing and for lending as well. So both the borrower and the lender are being rewarded. So it's something that becomes a standard, or very feasible and low barrier. So it's going to be there as a standard value proposition of the ecosystem.
Borrowing rewards are like incentives will not be there forever. It's like it's not sustainable, but it's cool when you're paid to borrow. It's something that first time blow your mind, but it's cool to do, but it's not a long time thing. There were in the Polygon Rush, in the Avalanche Rush. We are seeing it now being another time payable. The loans on Anchor protocol, but won't be something that will be durable.
I would say that it depends on how big is that reward. Sustainability is going to be specific to the dynamics. Having a blooming ecosystem is going to make it easier and cheaper to provide those rewards. And maybe there's some a level of rewards that is not going to be sustainable when the ecosystem is not growing exponentially. But I believe that there might be viable rewards for even people borrowing money. When you are lending money as a financial institution, for example, you're going to be spending both in terms of customer acquisition, marketing, brand awareness to begin with, and then specific customer acquisition to build those funnels to bring your customers to your offerings, and then all the processing that happens after the customer comes to your channel, digital or not. You're going to incur into some operational cost. So if you lower the costs in all that journey, that is money that you're saving, money that previously was being spent on getting you to borrow money. And if you're able to save that money, maybe some part of that can be put into rewards, and that's sustainable.
I'll give you an example of something that I've experienced already with respect to being incentivized for data sharing right now. So Experian in the UK recently introduced something for anyone else on the call who's in the UK may be aware of this. They have something called Experian Boost, where if you connect your bank account with your Experian account, they are able to assess whether or not you have a regular payment mechanism for subscription, like Netflix and Amazon, etc. And based on that, they reward you with a higher credit score. And with the higher credit score, you are, of course, being rewarded because you are able to access, you're being viewed upon as more reliable, etc., etc. So there is a direct benefit in my behavior of sharing information to how I'm perceived in terms of creditworthiness, and therefore what I can access on the credit market, essentially. So that's one example that I'm seeing right now.
And Valentine said also what can be done is if your data gets used to create risk assessment patterns to profile your type of personality, etc., this could be rewarded as cash back or rate reduction, for example. That's a really interesting way of rewarding.
In China already, which is very, the Black Mirror kind of world where all your social behaviors are indicators for creditworthiness, etc. Right? So everything is connected, which is highly scary, but is happening already.
It's interesting, like Valentine, your point of if your data gets used to create like a risk assessment pattern, it feels like an even another level of you having your data used, like understanding how your data is used and then being able to be rewarded for that usage. So that's another kind of piece of this.
All right, I think it's time. I mean, we don't have a lot of time left, just 30 minutes. We have another persona to go through, and we can do it rather quickly because I think this one is an easier one. A more predictable journey here, I think.
Yeah. Do we maybe want to do a quick ideation just on what happens with Diego, and then we can move into yeah. So I'm going to summon everyone to this section here. Great. So we're looking at another persona. So put Maya aside for a second. Become Diego. And Diego is an e-com entrepreneur, and he wants to get a personal loan to expand his business. He has Bitcoin. So he wants to use them as collateral to secure a better loan option and better loan terms. But his financial institution doesn't acknowledge crypto as an asset, nor collateral for credit evaluation purposes. So being Diego, what happens when he goes into the bank and states this? And he says, hey, I have crypto. What can you do for me? Can I get a loan still? So let's do a really fast ideation on this just for a minute. What happens? I think we're all thinking the same way, where the bank would say, that's nice, but we don't do anything there because the bank doesn't take Bitcoin as collateral. Yep, do you have a pay slip or you have anything else you can show me? Term deposit, yeah, so that's great, but here's all these products that we offer. I think we're in the right headspace here. So why don't we move back to our, oh, I have some more questions. Yeah, they would just be like, is there anything else?
In Italy, they may close your bank account if you say you had Bitcoins.
Yeah.
Oh God.
Experienced.
You should completely pack your bags and move to Portugal then, yeah?
Yeah, or to Lugano.
Oh yeah, Lugano.
I don't know if you've seen the Plan B conference, but
No,
was
I haven't.
quite dope. Yeah, next city with Bitcoin, USDT, and a stablecoin pegged to the Franco. I don't know how it's called, the Swiss coin, and they've made, well, I recommend you to go and watch.
Okay. Thanks for that shout.
Yeah. So let's move, now that we understand Diego, we understand he'd say, the bank would say, yeah, good luck. What alternative solutions could he maybe looked into that would help him with this? So let's do a fast ideation here about what those alternative solutions could be. And I'm going to set the timer for 2 minutes.
And for anyone who doesn't have access to Mural, you can just type in your chat.
Hi. Will we be able to access the storyboard that we are creating right now tomorrow? Can we like view it tomorrow later in the day also after the meeting ends? Yes.
Yeah, this this link will live on. So all you need to do is just click on the link and it'll be there for you to look at.
So where will we get the link? Like where do we save the link somewhere?
Yeah, maybe just save it.
So I was taking pictures of it, but it doesn't really make sense to take pictures. I want to view this later on.
Yeah, actually, Shireen had, maybe we can share the link, Shireen, to all the YouTube channels, because what we have there is every recording of these sessions are on YouTube with the link.
Because these sessions are actually very, very great. Like I really enjoy all of these sessions, ideation sessions.
Great,
Thank
we
you
love
so
hearing.
much. Thank you. Yeah, sure. So Zainab, what I can do is put the link to the mural on Discord, so you will have it there. And yeah, as Katrina mentioned, the session recording would be available on YouTube. It probably just takes a day to get there, and the mural link is also mentioned in the video description, so it all remains available for your reference.
All right, thank you. Is there a mural hashtag mural on Discord? Because
I don't think we have that.
so you will be sharing the link on Discord, right?
Yeah, absolutely. I'll share and tag you there.
And we can always add a hashtag Mural going forward.
Great. So it looks like these DeFi, we're just going right into DeFi, right? These DeFi platforms, Aave. You could sell Bitcoins and get traditional collateral. Finance with their providers, a 60-day payment. Find an investor against part of his business. E-commerce union credit. I'm not sure if I know what that means. Does anyone want to talk about that? Oh, and under collateralized DeFi lending. JJ, do you want to talk about that?
Yeah, I believe it's similar to what we had on the DeFi loan without collateral. It's emerging solutions that I believe have either are not ready or are just gaining some traction. So it's something to look to be aware of, but I believe it's not ready for payment. It's not actually an alternative in the
So, but what do you mean by under collateralized? Do you mean that they don't ask for like, covering 150% of the value of the loan,
Yeah.
for example?
Yeah.
Okay.
So he has some Bitcoin, but he doesn't have the full amount that he needs for his e-commerce company. So he's just going to put something 30%, 50%, whatever that is, and that will be the collateral, and that will require a credit assessment, of course.
Right. Got it. Oh, so the response to Katrina e-commerce union credit, Valentina has typed in the answer here.
Oh, some kind of group that support each other. Oh, interesting. Okay.
Is that be there already, or is that something that would be nice to have? Never heard of it before.
Yeah. It sounds kind of like a P2P lending platform in a sense. I'm sorry, Sandy, what did you say?
I said, but for e-commerce business owners.
Yeah. Some developing countries have such type of lending. Very interesting. Agricultural associations, yeah. Yeah, this community aspect is really interesting, right? Helping other people in your community. That financial inclusivity piece to that too. Great.
Okay, let's move on.
Yeah, so let's move on to our next section. So thinking about...
I wanted to comment, sorry, that we have P2P and crowd lending here, and I believe that's an emerging viable alternative for many companies now.
Yeah.
Great. Any other comments before we move to the next section? Great. So let's do the same thing now. So we're thinking about Diego. There are alternatives that maybe the bank doesn't offer in online and he could look at, but what would a bank solution need to have to provide him lending that's better than the alternatives? So why would he go to a bank? Let's say they have this offering now and it's great. What should it have and what would it need to have?
Remember the story here is he already has Bitcoin. He already tried the bank and the bank said, yeah, but we really don't care about it. So what would the bank do differently if they wanted to care about it is the other element in this.
Perfect. Setting the timer for 2 minutes so we can think about that. All right, that is time.
These 2 points are similar: connectivity of blockchain and crypto ecosystem, and bridge to DeFi lending platforms.
Yeah.
If bank can view this, they can use it as collateral. Oh, a way to easily view your crypto assets within your bank account, so you can see all your assets have lending coming from one place.
Same thing as this connectivity to blockchain and crypto ecosystem. Or like bridging the gap, really.
Yeah.
Asset to crypto USDC liquidity, kind of in this realm too, right?
From crypto valuation.
The idea here is that if you have cryptocurrency as a collateral, you need to be able to do evaluation on that to assess how much it's worth, and also to assess volatility and risk on that collateral.
I really like the point on the source of income. That's really interesting. If it was, well, I shouldn't say it, it's politically incorrect, but in the UK, they really don't really ask that many questions. Okay, if there's any other comments here, if not, let's go into the last section.
Yes. And now thinking about this data privacy side of it, and providing them a lending solution, or providing Diego lending option, what does the bank solution need to do to provide that data privacy side? So I'm gonna set the timer for 2 minutes again, and please put down your thoughts here.
And in answering this, please remember that we're talking about the asset being Bitcoin, and a continuation of the responses that you've made here. So adding another layer of data privacy on top of that.
I'm going to ask a question that maybe will help get some thoughts down. The AML check on the source of the income, how would you make sure that the check that they're doing is still private or like secure, making making Diego feel okay with that?
Actually, in answering this question, the thought that is coming to my mind is, what would a credit check look like if it's crypto assets? I've never gone through that process, so I can't imagine that. And what do people think about that?
I believe that the assessment itself, what the crypto asset does is it's provide a collateral that's not changing the capacity of repay for the customer, or the overall credit assessment. What that is doing is reducing the possible loss. So what's important there is just understanding how much that crypto is going to be worth, probably when you need to liquidate it to cover the loss. and to understand what's the outstanding amount from that. And on that, you're going to run the pricing on and the assessment of the risk. So the credit assessment of the customer is the same. What you're assessing separately is how much the Bitcoin is worth to cover the potential loss.
But isn't the whole point of going to DeFi the very fact that you're doing, well, this might be a very silly way of stating it, but if you're going into the DeFi route, should there still be a credit check? Is it still necessary?
If you go if you go under collateralized, yes, it's necessary. If you go over, it's not.
No, right? Yeah.
Because you have to like you can be liquidated basically. If you go under collateralized, there's no way. So it would be exactly to respond the question from before. It would be exactly as they do in DeFi, with a loan to value accepted and your health points. That's basically the rapport between the value of the maximum loan to value and how much you're borrowing. And when it's basically one under one, you get liquidated.
And so if we're doing the second scenario where it's under collateralized, what might someone, he's still a gig economy worker because he's, well, not necessarily gig, but he's an entrepreneur and he doesn't have a regular source of income as someone who's employed. So what would be the kind of data indicators that we would look for from someone like that, from a credit risk assessment perspective? And the reason I'm asking is then we can perhaps visualize the data privacy aspects if we know what kind of data he's going to have to provide, right? So what would be the kind of data that someone who's an e-commerce entrepreneur would provide?
You say uncollateralized or under collateralized?
Under. Should be under. Agree with the e-commerce revenues, yes. But it's not indicative of his ability to repay and his own personal cash flow, right? Because this is not, is it a business loan he's asking for or a personal loan? I forgot what the story was. Let's see what the story is.
I believe it was, it was personal.
It's a personal loan, right? Right. So it's his personal sort of income that we need to care about. Yeah.
Now, the income in a good part would be related to the e-commerce revenues.
Yeah.
The payment history would be the other important part. So if you're getting good income, the question is, are you repaying on time?
Correct. Okay, so that's at least a few things that we have. So now how do we protect his privacy in asking for this information on a potential alternative platform like a DeFi platform, which is being provided by the bank, right?
So an idea here is, for example, what if, and that will require building an ecosystem, of course, but what if the companies that are providing the goods that this person is selling on his e-commerce side, if they are able to provide a proof of payment, let's say that they are going to say, oh, he has been paying on time for this many times or during this time frame, this kind of thing. So without sharing the full information, they could say, this is the general amount of money, and this is the a proof that he is a good payer, essentially.
Yep. So we've answered the what type of data. We have not really answered the how to protect privacy part, have we?
With the proof of payment, that would be to provide, it's following the idea of the zero knowledge proof. It will be trying to minimize the information shared. Just saying, oh, he is a good payer, and I could put that into a secure ecosystem.
Okay. And yeah, we have this point here where we've talked about KYC ID on-chain, stored privacy, and yeah.
Yeah, before, I think I wrote it something before the blind signature, like go with a similarity group, like I don't know, someone who has similar score, let's say, and group it and blind sig the signature, so no one knows who has taken the loan, really.
Yep.
I believe that the challenge there is a KYC challenge, an AML. If you are going to provide some funds and you are under the regulation of any financial institution, you will need to know who are you lending to and what are the characteristics of the income of that person, the source of the income.
All right, so I think we've kind of ended the exercise with that. We've done the best we could given the amount of time to go through the two personas. Personally, I think we've more or less covered them fairly all right. It would have been great if we had a little bit more time to go even deeper on this one specifically. But how does everyone else feel about it?
Maybe I'll go first. So I feel like there's definitely a data challenge when we look at both like these use cases from a lending perspective. Sometimes the DeFi or blockchain feels a bit like a bit of a stretch, actually. Do we necessarily need blockchain or DeFi here? I understand the need for a KYC identity, all the potential it can have, but do we necessarily need to take all of these data about e-commerce revenue and other data on chain as well? I don't know.
I think that's a really good point.
Yeah, I like to comment on that. And yeah, I believe one of the more important parts for privacy is the capability to disclose only what you need to disclose, and that might be done with blockchain technology or not, actually. So if you're able to do that, to share data, and also it's about building ecosystems. It may be blockchain as well, but we were talking about just partnerships. Maybe if you have partnerships to share the data with, proper GDPR handling, even if you're not in a GDPR mandated jurisdiction, it could solve many of the challenges. So if you have visibility as a customer, what data is being shared, what's the purpose, and you have the empowerment to stop sharing that, to control the sharing of data, that's going to solve many of the privacy challenges.
Mm-hmm.
That being said, it might be a niche where higher privacy is going to be valuable, and it's going to be a minority of the population, but that minority has been growing in the past 10 years. So the other part is how much is this going to grow, and is this going to become an important business opportunity to grow this ecosystem?
Mm-hmm. And Valentine said, although self-sovereign identity is still in the making as a standard, it's been around since 2015, and EU has regulatory body that works on that.
But equally, EU is always ahead of the curve when it comes to these things, especially privacy related. So yes, not surprising.
Yeah, sometimes it feels like it's such a difficult problem to solve that it's taken really lots of time. Yeah, so this KYC issue has been there for a while.
Are there any other last thoughts before we close the session? Because I know we're already over.
Yeah. I guess the one last thing that I'd like to ask, just to bring it all together, we talked about two scenarios where we had, Maya and we had Diego, right? One was a crypto holder, the other was not, but they both come in the segment where they are marginalized to a certain degree because they're not the traditional, salaried employee. So from the perspective of the hacker, we've got some key insights for these two personas. What exactly would the hackers need to solve for, taking all these insights out? JJ, what are you looking for?
Well, I believe that I will jump into the Diego's persona. I believe that's a very real situation where more and more people have blockchain crypto assets, and they might want to use that to get some funding without selling their Bitcoin, Ether, or whatever that is, because probably that's going to become more valuable, or maybe they're expecting that to happen. So I believe that the Diego challenge is something that is going to be important. So the question here is essentially, how can we offer Diego, the Diegos of the world, the better access to the financial system, leveraging their crypto assets. And I believe privacy is a part of that, but it's not the main component for Diego. The main component for Diego is just to be able to leverage his crypto assets. So I believe that's a specific problem. The second problem, and that's Maya. And we were talking about whether that requires crypto or not, but the question is, how can we leverage more data, alternative data, minimizing data share to offer better loans, better terms, better access to finance? And that's the case for Maya. In her case, for example, she goes to the gym very avidly. She's very disciplined. So probably if she has been doing that for several years, that's going to provide a very good insight into her behavior. And that probably is highly correlated with a good financial discipline as well. So probably if she has the income, she probably that's correlated with being more probably a good payer. So if we were able to leverage the data without hoarding data, so how can we do the we app, the we bank approach, where you have all the WeChat and or the we bank approach, where you can hoard all the data and offer good terms by hoarding data? What's the alternative to that? What's the alternative? Minimizing data shared, but leveraging data that previously has not been shared, like their gym attendance.
Right. Got it. Okay, so do they get to choose which persona they want to tackle and just go from there, or would you like, 2 ideas from every team?
No, I like them to choose one persona and go with it. I believe that they are connected, but it's not the same problem.
Got it. Awesome. So any other last questions before we close?
Yes, I have a question. On the website Hack for the Future, there are a few problem statements listed down. So what were the problem statements for? Like, do we need to choose from those problem statements? Can we come up with our own problem statement?
Yeah, so you can actually choose one of these problem statements or work on something else. These are meant really to guide people who don't have a clear idea to work on for the hackathon.
So we are to choose from the problem statements already given on the Excel sheet.
You can use that, or you can work on something else. You do have the choice right now.
Okay, thank you.
Sure.
Great. Well, thank you so much, JJ and everyone. I think we had a really interesting conversation about all of this. And hopefully this helps give some ideas and what to think about when coming up with your hackathon project. Anything to add, Sahini?
No, I think it was absolutely, as always, a very engaged audience. Thank you, everyone, for participating at the level that you have. Very interesting. I really enjoyed it. Thank you, JJ, for offering all the mentorship today. And hopefully we'll have a few more sessions before we close the hackathon. I'm really having a lot of fun.
Thanks, everyone. Thanks for all your participation. For the organization as well.
Welcome. Thank you, JJ.
Thank you
Have a
all very
nice
much.
one.
Bye.
Thank you. Bye.
Bye.
Bye-bye.
Thank you. Bye-bye.